We're going to be talking about cryptocurrency arbitrage trading on Binance. And here quickly, I will explain how this arbitrage works before I will show you exactly how you can go ahead and get this arbitrage running for yourself too. Now, mind you can do this arbitrage with your mobile device. You don't really need a PC to do this, right? You can do this with the app and stuff like that. So for example, let's say you want to do this arbitrage right now. This is currently BTC Bear, right? Over here, we have the price of BTC to be $88,063. And over here, we have the price of BTC to be $88,107. Now, clearly looking at this, you will know that there's obviously a price discrepancy whereby the price at this point is smaller than the price at this point. So this means that if you're doing arbitrage, you are likely going to be doing it from here to here, right? So that's basically what you're going to be doing using this arbitrage trading opportunity. So you can actually do this arbitrage using several other pairs. It must not only be BTC, right? And before we continue, before we go on further with this, for those of you who don't know what arbitrage is, so let's say we have a token called token A, right? Or let's call it token AB, right? Just for reference sake. Let's say AB, ARB. And in market A, AB is equal to, let's say, $2 or £2, depending on how you want to call it or whatever, right? Let's just say $2, right? And then when it comes to market B, the same token is going to be equal to, let's say, $1.5. Now, clearly looking at this, there is a price discrepancy, which means that if you go ahead and buy the assets from market B, and then you move it over to market A, and you sell it over here, right? You're going to be left with a profit of $0.5 for every single token or asset you trade. So this means that if you go ahead and multiply this your trade to, let's say, up to $0.5, you do this multiply by 20 trades, right? This is going to be giving you equal to $10 profits for the whole 20 trades. Now, of course, there are several things you need to put in place. You need to think about whenever you're doing tradings like this. Things like the gas fees and stuff like that. But regardless, this is just the simple analogy on how, this works. So what you're looking at here, right here, is actually a bot. And what this bot does in Binance is that it gives you different versions of a cryptocurrency, in this case, BTC, in the sense that you have over here the price is cheaper and over here the price is more expensive. And the funny thing is that this mostly is the case in most of the time, right? The price is mostly, cheaper at this side, at this particular side, than this side most of the time, right? And let's go ahead and say, how you can actually go ahead and get to this place before we go on into the processes of what you need to do to actually get the whole bot running for yourself. Now, at this juncture, if you haven't subscribed to the channel, I don't know what you're waiting for. Just go ahead and hit the subscribe button. It doesn't cost you anything to do that, and it helps keep you updated every single time I drop new videos. Remember, I make videos on different ways to make money online. I don't just talk about cryptocurrency on the channel. I talk about things like marketing as well, and different things you can do or to start your own personal business. So don't feel like cryptocurrency is the only thing you're here to learn. Actually, you're gonna be learning a lot of things from the channel. So make sure to subscribe and hit the like button, okay? So quickly, let's go ahead and go back to the platform, right? So initially, when you come to a Binance account, this is basically what it's gonna look like, right? Let's go ahead and this is basically what your Binance account is going to look like, right? Now over here, all you have to do is to go ahead and go to your trade. Now, once you come to your trade, there's this thing called trading bots. You can find that right here. This particular one right here. Just go ahead and click on that. So once you click on this, it's gonna bring you over to a place like this, right? So once it brings you over to a place like this, go down again. You're gonna see this one called arbitrage bot, which is, in a common sense, is buy at a low and sell at a high. But before you do that, I want you to read what is written here on Binance. You can see clearly right here, it says delta neutral strategy to earn funding fee effortlessly. Now, some of you are going to be confused about this. To be honest, it's fair if you're confused. I myself was confused as well at the beginning of this whole thing. Now, just like you know, there are different types of arbitrage trading. They have the triangular arbitrage trading, they have the direct arbitrage trading, the indirect arbitrage trading, and so on and so forth, right? Now, this particular one over here is like a new arbitrage trading on its own. It says delta neutral. This, what you're earning over here is funding fees, right? So basically, when you put your money into this place, so let's just go ahead and click on that, right? So once you click on that, it's going to bring you over to a place like this automatically. That's all you have to do, right? So basically, what you have to do, like what you need to understand, is that whenever you trade this arbitrage, what the bot is doing is that it's looking for where the fee, the trading fee that is being charged on Binance is gonna go to, you know. So you know that whenever you place a trade, there has to be another trade placed to be able to, you know, accept your trade to go through. For example, let's say you want to sell your BTC at $89,000, right? And you place a trade at $89,000. Now, someone has to place a trade at that price and with enough liquidity to cover your own trade for it to actually be able to go through. If not, it cannot go through. Now, with all this in mind, there's something called funding fees, right? So every single time you trade, depending on the side or so depending on the side of which the market price is favorable to. For example, what I mean by that is what we have over here. We have the futures market over here, which is known as the perpetual market. I will have the spot market over here, right, which everyone knows as the spot market. Okay, so when the price over here, when the price of BTC over here is higher than the price of BTC over here, the bull traders, or those people who are entering long, those people who are trading the market to go to the upward direction, are going to be paying funding fees to the short traders, to those people who are going short, right? But when the reverse is the case, whereby currently right now the reverse is the case, you can see right now that the price of BTC at the spot market is currently higher than the price of BTC at the futures market. Now, what this means is that those who are currently trading shorts, who are going for the market to go short, are going to be paying these guys who are on a long position. So what this arbitrage bot does is that it doesn't put you in any trade, it just puts you in a position to be able to leverage off this, right? It's going to diversify your money in a way that no matter which direction of the trade or the market, your money is going to remain the same, except this time around, due to the fact that it knows exactly where the funding fee is going to, right? It's going to automatically give you leverage to be able to take profit or earn additional money on those funding fees. So what it essentially means is that you are earning the funding fees as your profit. That is actually what you're trading over here as an arbitrage. And for you to actually be able to do this, it doesn't really take you much. It doesn't take anything to do this. all you have to do is just come over here, pick an asset, which in this case you'll be given BTC USDT by default. So once you're giving BTC USDT by default, you can see over here the prices right here are listed right here. And over here, this one is perpetual, which is futures, and this one is spot, right? And then the bot it's a smart bot actually. Okay, so all you have to do is to go ahead and put in the amount. Let's say maybe you're trading with $1,000, right? So I don't actually have $1,000 on this account, so that's why it's showing me this. But if that's what I'm trading with, you go ahead and put that over there. It's gonna automatically, it's gonna automatically give you your estimated price and every single thing. Now, one thing I would advise you to do is to always leave this thing the way it is. Don't change anything. And the reason why I said this is because actually this particular bot you see right here has already been set up in a way that it will be of its optimum, performance, especially for beginners. But if you change something, it could affect something in the bot, which could end up triggering you to be on a loss because you haven't done your calculations very well. While you are doing that, I want you to take a proper look at this over here. It says over here, the entry spread you set is lower than the current spread. A position will open immediately after placing the order. So the current spread for this particular asset is 0.05. It has changed down to 0.06. So what I can do is, due to the fact I'm seeing the values right here, I can put it to 0.06, and you can see currently right now. Let me put it to 0.05 and see what happens. Right. So now you can see that the message has disappeared. But regardless, it doesn't really, matter that much if I'm to say, right? I can just go ahead and leave this as 0.01. And like it says over here that a position will open immediately after placing the order. That means if I place this order right now, the position is going to be open. The position is going to be opened immediately. But if I put it at a point where it covers this particular amount, let's say 0.05, it's not really going to open my position. It's by itself, it has actually gone higher again. It's by itself going to make sure that it mitigates the price to the best possible point where the spread is not going to be too much for something like that. Okay, so this spread in this case simply is referring to something like I don't know if you can be able to understand some engineering terms if I use that. Something like, let's say, tolerance, okay, whereby you're giving tolerance to a shaft or something, or a hole, okay. That's basically what it means. But if you put it at 0.1, it's basically way higher than that, and it obviously means it's gonna enter immediately, right? Putting 0.1% of your asset immediately at risk without mitigating anything. So right here you can see that you can see the percentage of the next payout of everything. You can see that over here. So this is the percentage of BTC, of the overall BTC this is gonna pay out and stuff like that. Okay, not in decimals. Like when I say BTC, I mean like a full BTC, right? Yeah, so that's basically it. This is basically gonna be like an introduction to this particular tutorial. If you find this more interesting, I'm sure that a lot of things you don't really understand yet. We can go deeper into it and discuss that more with a more extensive note, right? But for now, you can go ahead and play around with it and see really what it's all about. And for sure, let me know what you think about it in the comment section. Okay, take care.